JB here, JB here. Hope everyone's doing outstanding. December 26, 2024, 8:59 on this fine post-Christmas day. Hope everybody, Merry Christmas, Happy Hanukkah, Happy Holidays, and soon will be a Happy New Year. We have 4 trading sessions left in the new year. Futures are down just a tad here this morning after Tuesday's rally. S&P was up over 1%, Nasdaq was up over 1%, and S&P futures down about 0.3%. Considering we've rallied the 3 sessions, Friday, Monday, Tuesday, the nice reversal Friday, and then continuation on Monday and Tuesday, to see a little consolidation here today's. I mean, it's, of course, I would love to see things just continue to ascend, but not anything out of the ordinary here, and probably some chop around the 599, 601 area, and maybe we get some resolution into Friday and start working our way higher. At least to me, it looks like the path of least resistance continues to be the upside. I posted this chart in the chat room not yesterday, Tuesday, and this amount of stocks trading over their 50-day moving average has been kind of a thing that I've been looking at over the last couple months. And I can't get it up here, but every time it's hit a bottom and started to reverse, it was a market bottom as well. And we had that similar setup here last week. You can see the red bars, or at least the red parts on the chart. Those are the amount of stocks trading over their 50-day moving average. So we hit a low, I think it was 20% on Wednesday and Thursday last week with Fed Chair Powell's market-inducing sell-off, right? And then once that started to reverse Thursday into Friday, the market started to reverse. And you look, every time we've had that, we had back in May, back in August, and then all the way you start looking at 2023, there was a couple instances of some reversals. So if you're looking for a decent indicator, I'm all about finding some historically accurate indicators of reversals and trends. I think that one is certainly continues to play out. So we'll be watching to see how that goes over the next couple sessions. But if the amount of stock trading over the 50-day continues to rise, I think this bodes well, and the SPY is going to come up and finally hit that 610 handle. The thing of concern for me would be the yields, and I think to even get a bigger rally, the yields are going to have to start coming down. I put on the watch list on Tuesday. The higher they go, the higher the probability that we have some kind of reset, especially in some of the debt-laden momentum names, right? But for now, hasn't really popped its head just yet. But if we keep going up higher on the 10-year, that's certainly concerning. And then last but not least, I always say historicals. Nice little chart. I think this was on Market Watch. I posted in the chat room as well. But the S&P has been over its 200-day moving average for the entire year, and that's only had 11 instances, right? I guess N equals 11, or maybe it's more than that. And not much to take from this, because if you look, the average gain the next year is a 4.6% gain, and then you look at how many years are up and down, it's about 50-50. So not much to gain on that. Maybe I'll find some more historicals, but prepare yourself for the barrage of predictions and all that fun stuff over the weekend, over the next couple sessions as we head into the new year. And you start looking back at previous recession discussions and predictions, and a lot of them have been about recessions, especially into 2023, into 2024. And not only has that not been the case, seems like the economy's gotten stronger. At some point, these predictions, or at least recession predictions, will play out true, but we'll have to see how that, what those predictions are. There probably not gonna be a lot of them, right? And typically when there's not a lot of them, maybe that's the sign that, hey, maybe finally the R word's gonna crop up. All right, so that's overall markets. Some individual names. I talked about AMD. Tuesday morning, it was gapping. Monday, and some calls, it was running. The gaps ran and started to run. You start looking at the chart. I thought maybe some gap fills around 135 or so. Able to close some out to cover some cost. Held it to Tuesday, and then AMD did what it did on Monday. Gapped higher, rallying right after the open, and then just gave all those gains back. It was a 128 and change. So once it started getting to the 126s, didn't want to lose more profits, so I close out the rest of the calls. A name I'll continue to watch, because I think, especially if we get some bids, I can see it trading over 135 in the coming days. So definitely a name I'll revisit. Finally got into TripAdvisor, and TripAdvisor, a name I followed for a long time. I always talk about it's the most traveled website on the planet. There's also 2 other business areas that they derive revenues from, which actually are growing right now. You had M&A possibilities back in the spring last year, where there was an acquisition for $28, which was nixed by Trip's board. And then Trip just bought out the stakeholder, Liberty TripAdvisor, which they bought out their stake, which I think was the folks who actually nixed the deal. So that I think that opens more opportunity for M&A. Not only that, you start looking at the chart. Uh, I think it's headed higher, and also if you look at the shares that they bought back to of Liberty TripAdvisor to buy out their controlling stake, it was over $16 valuation. So you take that, it was over 16 bucks, and not only that, Trip Trip pretty much is using this as a stock buyback. So they're acquiring the shares from the stakeholder and then retiring those shares. So not only are they taking away that stake and that controlling interest, but they're retiring the shares and at a $16 valuation. Stocks at 14, it closed at 14.41 on Tuesday. So you start taking all those factors. I think it heads higher into 2025 and beyond. Also, I posted this chart in the chat room. Take a look at every year, well, at least the last 2 years. I'll have to go back and see how this rings true for previous years, but the stock rallies to start the year. So it did it back in 2022 into 2023 and 2023 into 2024, and not just run of the mill type of rallies, 30, 40, 50% plus. Of course, I would love to see it trade over 20 bucks into January, but I'll take over 16. I was looking at strikes and risk reward basis, and I was looking at February's, then I was looking at March's, and then I saw June volume start hitting the calls, and I went and got those June strikes. I think that those offer a great risk reward. Encompasses two earnings reports. One will be in February, one will be in May. And then if it breaks 15 in the next day or two, I'll look for some more shorter strikes just to play the momentum, right? All right, so that's TripAdvisor. Nice. Some areas of what I'd be watching. 1650 is probably the next big spot once it breaks over 1510. Solar Edge maybe need to wait to the start of the year for this to start to get going. Chopping around a very tight range the last two sessions. Again, 35% short interest. Just a name I think could really start to gain some momentum into the new year. Other travel names, I mean, not Clear Secure still has that tight Bollinger Band setup, closed in the green 3 sessions in a row. One of these days, it's going to break back over 30 and not look back and embark on a 30% plus move. Still looking to get Travelzoo calls into the end of the year. That closed up nearly 6% on Tuesday, back over 20 bucks, and it's gapping here at 21 in the pre-market. Again, a story I think is just not appreciated by the market, as they don't understand that, hey, there's a possibility this company could grow 40% next year just by changing their business model. That's Travelzoo. JOBY, great day on Tuesday as well. Still looking to get some later strikes, probably the April 10s. Nice name into 2025. And then on the flip side here, and always be hedging. There's names that I look at and think there might be an opportunity for downside into 2025, and I keep talking about Intuit and Decker's Outdoors. Deck's probably the better trade here because Intuit has already come substantially. Well, I would say, but 70 bucks, 10% off its highs already. Deck is right near its all-time highs. So I look at Deck and I think, wow, this might have an opportunity to trade down under 180 in the coming weeks and months, even if the market holds its ground or rallies. So that's that. I'll be back on audio. Let's have a great day. Rock and roll.